starts, and before at the first, for compliance reason, I need to ask George a question. Are you or your company have directly or indirectly the Lindian shares at the moment?
The answer is no. We're not conflicted.
Okay, thank you. I will hand it over to you. You can continue the following content.
Thank you, Max. Good morning, good afternoon, wherever you are, ladies and gentlemen. Welcome to Tiger Brokers and Richlink co-sponsored event. This is a regular event. The two organizations jointly host. This is probably our 8th or 9th session. In the past, we covered Australian companies in uranium, in gold, high purity silica, copper, lithium. So we tend to follow wherever the market interest is, and rare earth, because of its sort of importance in the new economy, in the energy transition, it's probably the flavor of the month. So we're very pleased to have invited two prominent Australian rare earth companies. Their projects are not all in Australia, but they are ASX listed companies to tell their story. First today, presenting Lindian Resources is its Managing Director, Mr. Alwyn Vorster. Alwyn is a 30-year veteran of mining industry and has a proven record of leading companies through all phases of the mining value chain, from exploration, project studies, approvals, development, infrastructure access, corporate transactions, to sales and shipping. His qualifications include a Bachelor of Science honors degree in geology, an MBA and Master of Science in mineral economics. Without further ado, I'll hand over to Alwyn to tell us the exciting Lindian projects.
Thank you very much, George. Thank you very much, audience, for making time to listen to the Lindian story. I'm going to use our corporate presentation today and step through the various aspects of this wonderful project that we have in Malawi. The background where you see my face on the screen, that is the Kangankunde mountain. It's one big carbonatite ore body with monazite minerals. It is one solid ore body, virtually no waste material, and one of the world's biggest and highest grade rare earths deposits, hard rock deposits discovered to date. So I'm very pleased to share this story with you. Very briefly talk about the company as itself. There will be a slight delay, so just bear with us. The company at the moment, the market capitalization about 130 million Australian dollars, or about $100 million US. We have about $10 million US cash in the bank. And on the right side of the slide, you do see the larger shareholdings. The top two lines are also representing the two non-executive directors or directors of the company. The chairman, Kabonga Holdings, and the second one, Mr. Park Wei, also a non-executive director in the company. So that is the company's share register. The assets of the company, we have very interesting bauxite assets in Guinea. And as the audience may know, at the moment, the bauxite market is very buoyant. The prices are high, and we believe there are significant value propositions, those assets in Guinea. In Tanzania, we also have bauxite, but it is a much earlier stage. Today, however, I want to focus on Malawi and the Kangankunde rare earths project. So there's the history of the Kangankunde project is that Lindian only really took ownership after years of negotiation of this project in Q3 of 2022. So it's only been 2 years since Lindian has been the owner and manager of this project. The company to date has focused significantly on exploration and has established significant resources and reserves, as I will show you shortly. Then in the last few months, we completed a feasibility study and which shows fantastic positive results and gives us confidence to move the project forward. At the moment, Lindian has 66% ownership of this project, and we have a very clear pathway to 100% ownership by making one further $10 million payment to the original vendors. So that is the current ownership structure of the tenements. Rather than focusing on the summary, I will briefly talk about the production summary that came out of the feasibility study. The ore reserves is about 23 million ton at 2.9% TREO. That is significantly more than most of our peer group in the hard rock rare earth projects. However, we have mineral resources of 260 million tons at 2.1%. So there is significant upside to increase the reserves if we really want to or need to for expansion purposes. At the moment, that 23 million tons with our production plan will give us a 45-year mine life. So significant mine life, which also then gives us confidence to talk about expansions, 3-4 times expansion plans in the future. The first stage, however, we plan to produce 15,000 tons per year of rare earth concentrate, which the total rare earth oxide component of that 15,000 tons is around 8,000 tons per year of TREO. Of that, about 20% is the actual NdPr. NdPr are the two, Nd and Pr are the two most valuable elements in our ore body and makes up 99% of the revenue from the rare earths that we will mine. As the audience may know, there's normally about 15, or depending how you look at it, 17 rare earths in every deposit. It forms one basket. All of them come together in one ore body, and then the challenge is to separate them through further processing. We are not going down that path. We are producing a simple concentrate that we sell to downstream processors to separate the NdPr from the basket. The mine, as I said, that's the Kangankunde Hill. It's a very simple open cut mining operation with one of the lowest waste to ore stripping ratios that I have come across in my whole mining career of more than 30 years. And I have worked in many big and small iron ore deposits, mineral sands, coal deposits, etc. And this is just extraordinary, the low waste to ore ratio. That allows low initial capex for the mining development and obviously very low operating cost during the mine operations. Very short haul, downhill, 2 kilometer to the run-of-mine stockpiles. So again, fuel very low compared to many other operations where there are 10, 20 kilometers of hauling from different types of ore bodies. One of the main benefits of this project is the mineralogy of the ore body. Normally with these rare earth deposits, there are massive flow sheets with massive magnetic separation, and particularly what's very expensive are the flotation part of these flow sheets. In our case, we have very limited dolomite and calcite included in the ore body, so virtually no acid-consuming minerals needed for big flotation. So we have a very, very small minor flotation circuit linked to the gravity separation and magnetic separation modules. Again, that reduces CapEx significantly and makes it a very low operating cost operation going forward. Power is very reliable. We are very close to the main power network in Malawi, and we plan to connect to the grid with hydropower. So it is the national power provider, and all the studies that we've done and reviews indicate a high degree of reliability on the power source. Ultimately, the workforce will be about 200 people during construction and 100 people during operations. So a fairly small, modest operation during stage one to make sure we can get this project up and running as quickly as possible. The transport solution, as the map shows, Kankankundi in the south of Malawi, we plan to connect by sealed road, which is already existing, with the rail network just south of Blantyre, which is the second largest city in Malawi, and then use the existing rail connection to the port of Nacala in Mozambique. We have studied that all. All the numbers are included in the feasibility study for that logistics solution. So basically, we will dewater the product when it gets to after the process plant, and it will go into 1-ton bulker bags, will go into a container, and about 1,200 tons per month will go onto trucks and then onto rail and exported to the various end users from Nacala. The pre-production capital cost is exceptionally low. It is 40 million total US dollars. That includes nearly $5 million of a contingency provision for growth and unexpected events during the construction phase. So we believe that it is a very reliable and credible number, and it looks significantly lower than our peer group. The confidence I have is that we have negotiated the process plant contract, which is in this table at $18.3 million. We had DNC, so a fixed price contract negotiations, where we have two very large Asian construction companies in the final stages of design. They're doing that in parallel on a paid basis, and we will select one of them in the near future to become the ultimate EPC fixed price contractor. So that number of 18.3, we have very firm quotes already for. That gives us confidence about the total CapEx number. In terms of OPEX, not many of the audience may follow the detail of rare earth operating cost, but I think a good reference for us is to look at existing producers who are publishing their numbers publicly, like Mountain Pass and Energy Fuels and so on, with who produce similar, a concentrate product which they sell to various end users, predominantly China. In our case, $3.71 per kilogram of rare earth oxide. Currently, the market prices, which is at a low for 18 months, it's a very, very low current spot price for rare earth oxides. That is currently selling for around $5 to $6 US per kilogram. depending on the quality of the concentrate. So you will see that our $3.71 all-in cost, that is up to the port, including the logistics, that is much lower than what is currently the going rate for rare earth oxides. So that is the big benefit. Most of the other hard rock deposits in Australia, at least, will have an operating cost significantly above that $3.71. And the audience could easily look at the results of those company feasibility studies announced. So again, this is an external independent cost curve produced by a consultant from the UK, and it places us in the very low quartile of global rare earth cost. Gives us confidence that even at very low prices, this project can be funded and can make a profit. I won't dwell on the merits of the rare earth industry. Suffice to say that our NdPr oxide is a critical input for, as George said at the start, for the ferrous permanent magnets used in wind turbines and electric vehicles. We believe in the growth story. We believe in the demand increase, and therefore we believe there is a growing Western supply needed to offset the absolute dominance from only one market, supplying this really to the global industry at the moment. So if we look at the pricing, which is obviously driving our assumptions on revenue, this slide has a lot of lines, but all the top lines are really listed there on the right side. Independent brokers, banks, forecasting the rare earth prices, NdPr dollars per kilogram prices. We have used the blue line at the bottom, and it really shows that in year one, which is 2026 for us, we assume a $70 per kilogram NdPr price. Year 1 to 5 average, we use an $82 per kilogram, and then life of mine, we use $109 per kilogram. So we have to believe that there is an increase in price to be, strong believers in the investment thematic for rare earths. At the moment, our offtake strategy is focused on the right side bottom. We have one offtake agreement with a US-based trading company called Gerald Metals for 40% of our first 5 years of production. We will aim to have around 80% locked up with offtake agreements before we start production. That is the focus now in the next few months to get that over the line. Importantly, the final results of the feasibility study on the left-hand side, if I focus on the average annual EBITDA, you will see there in US dollars, the second last column, $83 million US per annum on EBITDA, NPV of $800 million US dollars on a pre-tax NPV 8 basis. The pre-tax IRR 99%, an extraordinary result. The payback period 1.25, again for rare earth projects, and for most projects, most investment propositions, a very short payback period with an NPV capex ratio, really, or in return on investment, 19 times according to these financial model analysis. For me, the most important number actually from the study showed on the right-hand side that even at the current spot price of $50 US per kilogram, we can still have a positive annual EBITDA of 11. So it's not that we are then printing money at the current prices, but we can still make a decent annual EBITDA at the current spot prices. As it increases, it is absolute blue sky above above 80, and above 110, it is a real fantastic opportunity for future investment. As we see often in commodities, most sensitive to pricing and FX changes, but very insensitive, not big fluctuations with changes in CapEx and OpEx, which is always good to see from a risk perspective. In terms of funding, we would need around 60 to 70 million US over the next 18 months. We are not planning at the moment to really have to raise $60 million before we proceed. Our focus in the next 2 or 3 months is to have an additional 25 or 30 million US, in addition to the $10 million that we have in the bank currently. That would give the board sufficient confidence to award the big contracts and to proceed with the construction of the project. We are confident and we are making good progress with current funding discussions on those first 25, 30 million. And we hope that by October, November this year, we will be in a position to then award the big construction contracts and mobilize to site. As per the schedule at a high level, it is about 15 months from mobilizing for construction to first product on ship. So if we can start construction in Q4 this year, then we can have first product on ship in Q1 2026. So it's a relatively short time period up to that point. We have excellent relationships with the community in Malawi. We have good relationships that have been developed over the years with the government, strong support from the government, from president level to Minister for Mining level and the senior government officials. We are confident that our current approvals are all in place and will support us moving into construction and then operation in a very short period in the next few months. That is really the summary of the Lindian story in Malawi. We believe in the global supply. This is an absolute tier 1 asset. There is no doubt it is one of the top 10 rare earth assets ever discovered. Very competitive CapEx and OpEx from our project. A return on investment that blows away anything that I've worked on in my 30-year mining career. We are fully permitted and we have a scalable asset that we believe can easily produce 3-4 times the size of our initial stage 1 project. Thank you very much for the audience and happy to take questions.
Thank you, Alwyn, for that exciting presentation. Indeed, the Indian story is very exciting. I forgot to remind audience there is a Q&A session after the presentation. So please submit your question through the platform. You can do that in Chinese or English. I'll translate for Alwyn. At the moment, I have a couple of questions from sounds like either your existing shareholder or a prospective shareholder. It's all talking about your share price. So there's been, let me see, Lindian's stock has fallen a lot recently. Do you have any comments?
No, I can't comment on the vagaries of the market and why certain people have potentially lost confidence in the Lindian story. For me, as I said, in my career in mining, I have done many feasibility studies and taken projects from this stage, into development. And this is the best of all those that I have come across. And particularly now that we have finalized and published our feasibility study, I have absolute confidence in this project moving forward to construction and making good profits for investors in the future. So it is a very interesting position that I see some people decide to lose confidence and move out. The believers will be rewarded, in my opinion, over the next 2 or 3 years if they stay in Lindian stock.
Right. I probably just mentioned the next question. It's not a question for you to answer, I suppose. Is there any hope for the company shares to have a tenfold return? The next question is, I'll rephrase it. How do you compare with the top companies in the industry globally?
I had some contract involvement in another hard rock Western Australian company where I supported the company with contract discussions and CapEx, OpEx reviews. Also, what I believe is a good project and hopefully will have a future. But, we put this Kangankundi project next to the parameters of all the Australian companies that are known currently and listed on the ASX. And, from resources to reserves to grade to low mining cost to stripping ratio, waste to ore, to simplicity of flow sheet, CapEx, OpEx, return on investment, all the parameters that I'm aware of are actually superior in this case. I'm not saying any of them are inferior or are bad, but this project show better characteristics across the whole spectrum of what investors can evaluate the value of a project. And therefore, I feel this is a global top 5 project in the rare earth industry, including China.
Right. Thank you for that. Okay. The following question are probably too early, asking about dividends and buybacks. It's probably not for you for now. Okay, I guess with that, I'll say goodbye to Alwyn. And I see our next presenter is already online. And his name is Tiger Brown, representing Astron Resources and Astron Corporation. You're very appropriately named for today's event. I may confuse a few people as well. You have nothing to do with Tiger Brokers, but it's a happy coincidence. Tiger joined Astron in 2018, holding various business development planning and executive roles in China and in Australia prior to joining the board in 2019. And in February 2019, Tiger was appointed managing director and has overseen the detailed planning for the delivery of the Donald project, which is another project have a rare earth elements in it. So I'll hand it over to Tiger to tell us the Astron story.
Thanks, George. I'll share screen now, and hopefully this works well. Thanks for the kind introduction and invitation to present to your network today. It's an honor to be able to share the Astron story with all of you. Before I jump into the presentation, to give you a bit of background about who we are how we've gotten to where we have gotten to where we are today and what we're all about, I'll just give you a rundown of the company history. So Astron was first started in the late 1980s by my father trading mineral sands products. By that, titanium feedstock, zircon materials from South Africa, Western Australia into China. And over time, as China grew, we grew along with it. We became one of the world's largest trading companies, and we went downstream into zirconium chemical producing. So in the late 1990s, early 2000s, Astron, in fact, was the world's largest zirconium chemical producer. And that's when we went to buy, we thought, why not be vertically integrated? And that's when we went to buy our own mine, which was the world's largest mine that we could find at that time, being the Donald Project. I'll provide a detailed introduction around the project itself shortly, but in 2009, we sold out from our operations in China for $220 million and returned $120 million to shareholders. Since then, our focus has been on the world's largest zircon project, and that is Donald. In terms of the project itself, it really is outstanding in three key aspects. Firstly, the size and scale of the resource. In addition to being the world's largest zircon resource, it's the world's fourth largest rare earth resource. The second part is how advanced we are with all our existing approvals and permitting and announced detailed feasibility study already complete, of which the results are on screen. And then finally, the markets we serve. We're not just solely a rare earths project, but actually rare earths is one of the two products that we will sell. The first being the zircon and the titanium feedstock as part of the heavy mineral concentrate, and the second being the rare earths and a rare earth element concentrate. Diving into each of those in a bit of detail, the project's located 300 kilometers to northwest of Melbourne, and to give you a sense of the scale of that sort of little red dot within the map of the state of Victoria, from north to south, it ranges about 67 kilometers. From east to west, it's about 10 k's on average, on average, so that gives you a sense of the size of the project. Within that license area, there is a mining license, and we're the only project in the eastern seaboard of Australia that has a granted mining license. In terms of the forecasted economics, which was covered just before on the slide before, we have a total anticipated capital expenditure of $400 million that is forecast to return about 150 million EBITDA per year for a 41-year life, generating an $852 million NPV. And all of that is based on what is the mining license area, as you can see within that 5x5 block that only contains 17% of our total resource. So if we were to keep going at the rate that we plan to go, we can mine this thing for 200 years. Other things that we talked about around where we're at in the feasibility study has been detailed, complete, and in fact, we've now, of the 400 million, just recently signed an exciting transaction with our US partners, Energy Fuels Resources, to bring in the equity investment that's required for the project. In total, Astron requires a $400 million capital investment to get the project started, to generate the financial returns that we need to have. Of which we've just signed a transaction that with a US partner for them to provide 183 million, being the equity that will be required to get the project started, in exchange for them receiving 49% of a joint venture when the project is fully funded. In addition to that $183 million, they'll also issue to us 17.5 million of their securities. This allows us to move into the next phase of our development in relation to securing the debt and various work streams to get construction ready by the end of this year. In terms of conditions precedents, they're relatively customary and are well advanced. And finally, the structure allows Astron, with our development history and our focus on mineral sands, to remain the manager of the joint venture and responsible for day-to-day operations. In terms of what we'll have why did we choose Energy Fuels as a partner? Well, for Astron, with our mineral sands history and background, we were extremely keen on remaining in the mineral sands landscape and being part of that market for the long term. What we find in Energy Fuels is someone with the rare earth excellence that can help us get this rare earth and mineral sands project started. For those of you who aren't familiar with Energy Fuels, they're a US-based company with an operating rare earth processing mill in Utah. They're the only company in North America that has a capability of processing monazite, the product that we're trying to produce. They share our ambitions in relation to growth and growing the story and the project. And with that partnership, we get to create together a rare earth value chain that with Australian minerals processed in the US for the US and the European market. Now, I know Alwyn's probably gone into a lot around the rare earths market and its dynamics. It's really interesting where we find ourselves today in relation to the rare earth price, which is subdued. Historically, 60% of the rare earths demand has been a result of consumer electronics. Now, as you know, if you were to buy a phone, you would have bought it in 2011, 2021, 2022. If you were to buy a laptop, you would have bought it in 21, 22. Yes, there's still a large growth in the demand required for the electric vehicles, but that subdued commercial demand for electronics and consumer goods has sort of allowed for this lull in the rare earths price, where the lowest cost producers in the world are operating at break-even levels. Now, as we move forward, we expect demand to grow significantly with a rebound in consumer electronics, as well as the forecast growth in electric vehicles that should drive the demand to increase threefold by 2035. Now, it's important to note that when we talk about rare earths, it's about the four that are valuable, being neodymium, praseodymium being the lights, as well as terbium and dysprosium being the heavies. They have different valuations, and the lights are more common. The heavy rare earths are less common, and the heavy rare earths are more for heavy duty applications. So, for example, you'd have a wind turbine, which you don't need the temperature of the wind turbine to operate. Well, all of them are used in, taking a step back, apologies. All of the rare earths are used in the permanent magnets that generate electricity, or in the motors that require the generation of power. The more heavy duty the application is, such as defense and so forth, the more heavy rare earths you require. And that means dysprosium and terbium are of higher prices. For us, a large proportion of our rare earths are actually the dysprosium and the terbium in terms of the valuation. So 40% of our rare earths come from the two heavy rare earths. We talk a lot about mineral sands at the start. So what is it? It's the titanium and the zircon, titanium feedstock and the zircon. Titanium is used for paint. there's about 7.5 million tons of titanium demand each year. And zircon is used for ceramics as the shine that you have on the glaze and the bathroom tiles and so forth. And there's about 1.2 million tons of zircon demand each year. It's really interesting as we go into market and get ready that we're actually anticipating a supply shortage for all three of the products that we plan to produce, being rare earths, zircon, and titanium. Most notably, historically, the zircon supply has been concentrated in the hands of three players, Iluka, Tronox, and Rio. Together, they used to account for over 75 to 80% of the world's zircon supply. Now, as we enter into the next phase, as you can see in the graph on the right, one of the major suppliers who used to account for 30% of the world's zircon supply is expected to have their main project be exhausted within the next 2 to 3 years. And that's where you see that big cliff starting from 2026 in the existing supply in terms of the blue, where it represents a significant opportunity for someone like us to get a foothold in the market and grow with it. We operate a mineral sands separation plant in Yingkou today, and we'll sell most of our products to the Chinese market on the mineral sands front and the rare earths to the US. And in terms of that, we'll sell a proportion to our own plant to capture additional upside. Over the last 4 years since I've been associated with the project, we've been really fortunate, and this is something that personally I'm the most proud of getting technical excellence, professional people on board. And we see that through Sean Chilius, coming over from BHP with over 30 years of project experience, building and delivering projects across a number of different jurisdictions. Greg Bell, coming over from Mineral Deposits Limited, who built a project in the mineral sand space from 2014 in Senegal, who've again done it before, proven, and able to, this is a replication for them. In terms of our board capabilities, George serves on the board of Astron and has over 40 years of project experience, including previously at RGC Limited, one of the world's largest producers of mineral sands in the 90s. So that sort of gives you a really rough overview of where we are and what our value proposition is. Having now signed the joint venture contract, we move into a phase of execution. And yes, there is the upside, there's the NPV, there's the anticipated cash flow. But for me, on a day-to-day basis, it's all about how we're going to manage risk as we enter into the next phase of our development. And that includes ensuring that our geological model will be delivered in the feasibility study. And we know that we will be able to do that through the fact that we have done over 2,000 drill holes on the mining license area. Over 85% of the resource is of the highest category possible, and over 95% of the reserves are of the highest category possible. In terms of mining, we have done a bulk scale, large scale test pit, and we have rehabbed it. And finally, in relation to the processing, everything that we're trying to use in terms of technology has been done before. We're not here reinventing the wheel. We have trialed the separation techniques at lab scale and at pilot scale, as well as engaged world-leading engineering services providers, whether that be Mineral Technologies, who did our test work, or for that most recently, Sedgman Proprietary Limited, to build and review the process flow sheet. Just diving into it a little bit more around, when I say we're not reinventing the wheel in relation to the separation flow sheet, why is that? Well, in terms of mining, we're using trucks and the truck and shovel method, as simple as it gets. Then we'll have an ore that's fed on an ore stockpile and processed through a trommel before sent through to spirals. The spirals that we plan to use have been used at over 15 sites at a commercial scale before. And then finally, we'll do a rare earth flotation, separating out the mineral sands from the rare earths. That flotation method has been around for over 40 years and is in full-scale production at our Lucas sites in Eneabba. Now, over time, we'll look at expanding our operations. There's no point having a mine for 200 years. We do plan on eventually getting a larger part of the market. And we've done a PFS on that showed an NPV after tax of 2.2 billion Aussie dollars for 58-year mine life. We talk about the project in terms of its advanced nature, and yes, it's de-risked. Part of the de-risking comes from the fact that we've got all our approvals, most of our major approvals in hand. We're the only project in Australia on the rare earths front that has, on the eastern seaboard of Australia, that has a granted environmental effects statement, a granted mining license, and a granted federal EPBC license. We have our culture heritage management plan as well, which is sort of Indigenous engagement and so forth. And we have an approved export license, which we're in the process of updating. There is now, moving ahead, one final piece of permit that we require. That's what we call a work plan, for which things are very advanced in those, where we submitted the work plan approval to the Victorian government in October, and we're expecting that to come through in the next 3 months. That really provides us the catalyst to move into the next phase, moving dirt and getting the thing built. I'm not sure if many of you are familiar with mineral sands mining, but this in particular is quite important to me in terms of the ESG nature of the fact that we're digging up farmland, but we're returning it back into farmland in no worse, if not better conditions than what we found it in. The way that we mine, we take the topsoil, stash it, subsoil, stash it separately, overburden, put it somewhere again separately, so we can't mix the three. And then you dig up the ore, take away 5% of what you dig up in the ore into the products, and return all of that back into the tailings, and then relayer it based on the overburden, subsoil, and topsoil as the way we found it. And that's how we ensure that we get it back into farmland. You can see the photos on the right-hand side as to sort of the test pit that we've done and the successful crops that you see on page 4. It looks very nice. Finally, in terms of timetable, I talked about construction at the end of this year. We're anticipating an 18-month construction timetable to have first shipments ready in the second half of 2026. And that's when we should generate cash flows. There's a lot of work ahead of us, but we're excited, we're eager and excited to take it on. So just to recap, looking ahead, there's a number of key catalysts for us in relation to the share price, and well, potentially share price sensitive in relation to where we're moving. These include getting the debt package arranged for what we require in the CapEx, getting the final piece of approval being the work plan, update the economic model to comply with the international standards and updated CapEx, OpEx, forecasted cash flows, and then delivering upon the operational readiness program to ensure that the transition from construction to operations is as smooth as possible. Just to summarize, and I guess in relation to the Donald project and why it's such an outstanding project, it goes back again to the 3 points: the size and scale of the resource, the advanced nature of our project in relation to the feasibility study, engineering work, and the approvals, as well as the products that we serve, being that mineral sands and rare earths. Thanks, George. That's my presentation.
Thank you, Tiger, for that presentation. Even sitting here, I can feel your excitement and energy. Just a question from me. Given your U.S. joint venture partner, Fuel Energy Fuels, is contributing the equity, is it now solely Astron's responsibility to secure the debt finance, and the offtake is from the joint venture partners? Is that going to be an issue?
Well, I think in terms of the debt, we don't think we actually think the offtaker having skin in the game, investing in the project is a really strong message to send to the bankers. And the caliber of Energy Fuels as a company with over $1 billion market cap really is, again, a very positive sign to the bankers.
Indeed.
But we will be looking at back-to-back offtakes for them in relation to their rare earth product, and for us in relation to the zircon and titanium feedstock, to ensure that we get the cheapest debt possible that we can arrange. Yeah. And just on that, I don't think I highlighted the exciting partnership of Australian minerals being processed in the US. That just ticks a lot of boxes in relation to whether it's Australian government critical mineral strategy or the US Inflation Reduction Act, or ensuring domestic manufacturing supply. That all of that allows us to be in engaging with government agencies and credit agencies for potential cheap sources of lending, which we are undertaking.
Very good point to be made. What is the, I guess this is talking about technical stuff. What is the biggest challenge for Donald project?
Yeah, in terms of the, what do we lose sleep over? I think the technical hurdles have been really well addressed. Throughout our development history, we've done, as I said, lab scale, pilot scale processing of this material, and so forth for now, to make sure that everything is proven and ready to go. I think with any project, you sort of go through the risks. Yes, there's a technical risk, but we've well addressed that. There's geological risk, but we've well addressed that. For us, the next thing for us to control is the construction risk. So mitigating construction blowouts, making sure that they don't, things don't drag on. We deliver on our construction timetable. We go for fixed price contracts for as much as we possibly can. That's sort of how we're looking at it, and ensuring that labor, we have housing for labor in terms of the construction crews, adequate, so all of that is supported in the right way. I think that's sort of where we look at the main risk now for us, and is in project delivery. From a technical standpoint, I won't say no mining project doesn't have its risks, but we've de-risked it to the nth degree as much as we possibly can now as we move into sort of construction.
Right. And in terms of infrastructure, can you just highlight on because you're moving large tonnages once in production, so the power supply, given the location, obviously that's a huge advantage, but can you care to comment on the logistics?
Yeah, I'll jump back to this slide where we show a more detailed tenement map. As you can see, sort of there's a significant amount of existing infrastructure around our project being located in regional Victoria. So what we need to build a power line, a 66 kV power line along existing easements, and then a 10 to 15 kilometer water pipeline, again, along existing easements, so we don't have to go out and get a very long approval process for those supporting infrastructure. The road already exists out there, and we'll be transporting it for about 70 kilometers before putting it on rail to go to the Port of Geelong for the materials for some of it, and for the rare earths, likely the Port of Adelaide. So I think it's a really interesting point that you highlighted, George, that most of the infrastructure is already there. And that's why for rare earth projects, I know following Alwyn's project, he had a very low capex, but our project at 400 million is still very, very cheap in terms of what we need to build. And that's because we're fortunate to be located in regional Victoria.
I think that addressed all the relevant questions. A lot of the comments here agreeing with your position on the significant market opportunities in automotive, like electric vehicles and renewable energy. Also, people think your financing is more or less in place. So it's basically, I guess, your team to deliver the projects. So congratulations on what you have achieved so far, particularly the deal you have done, the JV with Energy Fuels. And we look forward to catching up with you in the future on your progress.
No, thank you so much for the invitation. It's a pleasure to be here and present our story. I think it's very exciting, and it's up to us to deliver now.
Indeed. With that, we'll wrap up today's event showcasing Australian rare earth companies. I thank you for your participation. Until next time, goodbye.
Cheers. Thank you.